In this question, we've been told that the following are the summaries of balance sheets of Vijay Lakshmi Limited as on 31st December 2020 and 2016. They've given us the liabilities, they've given us the assets. They've also given us some adjustments. The adjustments are depreciation written off on plant rupees 20,000 in 2016. Dividend of rupees 40,000 was paid during 2016. Income tax provision made during the year 50,000. A piece of land has been sold during the year at cost. Prepare the statement showing changes in working capital and fund flow statement. What is being asked as to us in this question is they've asked us for the statement showing changes in working capital. They've also asked for fund flow statement. Now, for us to prepare a full-fledged fund flow statement, we must know funds from operations. Funds from operations or lost in operations, for which we have to prepare the adjusted profit and loss account, which means we have to carry out, or we have to prepare all the three statements. We have to prepare schedule showing changes in working capital, adjusted profit and loss account, and then we have to prepare statement of sources and application of funds. Now, let's just quickly visit the adjustments that has been given. We've been told depreciation written off plant is 28,000. Now, your opening balance on plant is 30,000 from 3 lakhs. Your opening balance on plant is 3 lakhs. Over here, it is given to us clearly. This to be 3 lakhs. From 3 lakhs, you are writing off 28,000 as depreciation, which means it should be 3 lakh minus 28,000. However, in 2016, instead of the amount reducing, it has gone up, which means there are some transactions that has taken place with respect to plant, which needs further investigation. Now, how would you investigate the transactions which have taken place over here? For this, you will have to prepare a ledger account for plant. Next one is dividend of rupees 40,000 was paid during 2016. Whenever dividend is mentioned in the adjustment, please remember this is nothing but your interim dividend. Okay, this is nothing but your interim dividend. What is interim dividend? Dividend paid during the course of a financial year. Final dividend is what gets paid at the end of the financial year. Here, since the dividend is mentioned as an adjustment, it would be interim dividend. Income tax provision made during the year was rupees 50,000. So what does that mean? You have provision for taxation in the question. You have provision for taxation which is given to us in the question. Now, what has happened here is that along with this provision, you have gone about adding some more money. You have contributed some more money. So opening balance in 2015 was 60,000. To this, you have added another 50,000. So technically 2016, your closing balance should have been 60,000 plus 50,000, which was 1,10,000. But it is not 1,10,000. Instead, it is 70,000, which means here as well, there is some transaction that has taken place which you're not quite familiar with, and that needs investigating. So for this as well, provision for taxation also, you have to prepare a ledger account. The next point that has been told to us is a piece of land has been sold during the year at the cost. A piece of land has been sold at the year during the cost. What does that mean? You have disposed some land off, which means there should be a change in the value. So here 40,000, then you have 3,80,000. There are some changes which has happened, and let's focus on that. So for this also, we will have to prepare a ledger account. In total, we will have to open 3 ledger accounts, which are you will have to prepare a ledger account for plant, you will have to prepare a ledger account for provision for taxation, and then you have to also prepare a ledger account for land and building. The very first step is to go about preparing the schedule showing changes in working capital. For us to prepare the schedule showing changes in working capital, please remember we must consider all the current assets and the current liabilities. We must be considering current assets and current liabilities. Now, let's just quickly identify which are our current assets. Land and building, that's a fixed asset. Plant, fixed asset. Debtor, yes, this is a current asset. Stock, yes, current asset. Cash, current asset. Bank, this is also current asset. Now let's look at the liabilities. Which are the current liabilities? Share capital, no. General reserve, still no. Profit and loss account, it is nothing but net profit. Short-term loan, yes, this is a current liability. Creditor, this is also a current liability. Provision for taxation, we have an option of treating it either as current liability or non-current liability. Nothing is mentioned in the question. However, please notice point number C. Please notice point number C. We have income tax. We have another adjustment. Since we have another adjustment pertaining to the same item, we cannot treat this as a current liability, non-current current liability. We must treat it as a non-current liability. Provision for taxation, you cannot afford to treat it as a current liability. You must treat it as a non-current liability. Next, let's go about with the first step. First step is to go about with the preparation of the schedule showing changes in working capital. Let's just quickly prepare the format and let's start off. So I've got the format over here ready, and I'm just going to start filling this up. We've got the years. We have 2015, then we have 2016. These are the 2 years for which we have to go about with the preparation of the. Schedule showing changes in working capital. Now let's have debtors. We have debtors, and debtors is 1,60,000, and then we have 1,28,400. Okay, we have 1,60,000, and then we have 1,28,400. So now please remember here, we are capturing what impact does it have on your working capital. So here what has happened is debtor has reduced. Because debtor has reduced, your working capital will also reduce. So your working capital will reduce by 31,600. Next is stock. Okay, next thing that we have is stock. Stock is 2 lakh, and here it is 1,48,000. Stock is 2 lakh, and then we have 1,48,000. So what has happened with stock? From 2 lakh, it has reduced to 1,48,000. There is a decrease, and let's calculate how much is the decrease. Decrease is by 52,000. The decrease is by 52,000. Next, we have cash. Cash opening balance is how much? 1 lakh. Then we have 1,200,000. Oh, sorry, it was 1,000. I'm so sorry. It is 1. Cash is 1,000, and second year it's 1,200. What impact does it have? Your working capital will increase by 200 rupees. Next, we have bank. Bank 2015 it's 0, and then here it is 16,000. Okay, so what impact does it have? It will increase by 16,000. Okay, now let's calculate the total. Which is the total? Let's just quickly sum this up. Let's take the total, and total is done. Okay, first year's total we have calculated, second year's total also we have calculated, and that is completed. Now let's move on with the current liabilities. What are the current liabilities that we have? We have short-term loan. You have short-term loan, and short-term loan is how much? 1,40,000. Second year it is 0, which means your short-term loan has come down. What impact does it have? Your working capital will increase by 1,40,000. Next, you have creditor. Next, you have creditor, and creditors is 3 lakhs, and it's 2,70,400. 3 lakhs and 2,70,400. So what impact does this have? Here, what impact it has is that there is a increase in working capital. Now, how much will your working capital increase by? Working capital will increase by 29,600. Working capital will increase by 29,600. Okay, so this total also we have calculated, and that is done. Now we have to calculate the working capital. Now, how do we calculate working capital? Working capital, we will be taking a difference. Between current asset and current liability. Okay, we will be taking a difference between current asset and current liability. And here, current working capital over here is minus 79,000, and second year it is positive 23,200. Dear students, in this case, what is happening is there is an increase in the working capital. There is an increase in the working capital. Now, working capital has increased by how much? Okay, working capital has increased by how much? Negative 79,000 has become positive 23,200. Okay, negative 79,000 has become positive 23,200. So, which means the answer is 92,200. Okay, the answer is 92,200. Let's quickly cross-check my calculation just to be sure that I'm absolutely correct. Okay, sorry, it is 1,02,000. Okay, so sorry, it is 1,02,200. So 1,02,200 is the increase in working capital. Okay, so that is the increase in working capital. So I'll just quickly cross-check this answer once again. Yes, absolutely correct. Okay, so here there is an increase in working capital, and the increase in working capital is by 23,200. Okay, the increase in working capital is by 23,200. So we have successfully completed with the first step. Here we are focusing on the preparation of the ledgers. Why are we preparing ledgers? We are preparing ledgers because there are some changes which are taking place in the items for which we really don't understand the reason, or we are trying to carry out an investigation to try and evaluate and see why those changes are taking place. Okay, so why those changes are taking place. So what are the changes that we can go about? So to trace those changes, that's the reason why we are preparing these ledger accounts. Okay? To trace the reasons for those changes, that is the reason why we are preparing these ledger accounts. Now, moving forward from here, what we have to remember in this particular question, we are preparing ledgers for land and building, plant, and provision for taxation. Land and building, plant, these are real assets. Okay? These are real accounts. So remember the golden rule: debit what comes in, credit what goes out. Okay? Debit what comes in, credit what goes out. Provision for taxation, that would be a nominal account. So debit all expenses and losses, credit all incomes and gains. So at first, let us start off with the preparation of the ledger account for plant. We are starting off with the ledger account preparation for plant. So we are preparing plant account. Okay. Now, plant account, please remember, it is a real account. Okay. Plant account is a real account. So let's look at this. So plant account, since it's a real account, which side will the opening balance feature? The opening balance will feature on the debit side. So it will be to balance brought down. The amount is 3 lakhs. So it is to balance brought down, and it is 3 lakhs. Next, what we have is now, and then we also have the closing balance which is being given to us. How much is the closing balance? Closing balance is 3,48,000. So which side will the closing balance feature? It will be featuring on the credit side. So by balance carried out. By balance carried out. 3,48,000. 3,48,000. So this is the balancing figure. Okay, so this is the closing balance. Okay, this is the closing balance. I'm so sorry, it's not the balancing figure. This is the closing balance. Now, what has been told to us? We've been told that there is a depreciation written off plant, which was 28,000. So depreciation is charged for plant. When depreciation gets charged on plant, what happens with the plant value? Plant value will reduce. So since plant account is real in nature, debit what comes in, credit what goes up. So some value of plant is going up. So what would that be? That would be by depreciation account the amount is 28,000. Okay, by depreciation, the amount is 28,000. So when we work out this, what you would notice is that this is the only piece of information which is being given. That this is the only piece of information which is being given. So now let's total this up. We see that credit side is more. Okay? Please notice that credit side is more. So since credit side is more, what will we do? We will have to, so here also it should be 3,76,000. Here also it should be 3. So which means there has to be a balancing figure. Now how much is the balancing figure? Balancing figure is 76,000. Okay, balancing figure is 76,000. Now when can we have a debit entry? Debit entry we will have in plant account when some amount of plant is coming in. Remember, plant account is real account, golden rule is debit what comes in. So here plant is coming in, so which will be to cash account. Okay, to cash account, and this is balancing figure. It means you have purchased. Okay, just for your understanding, I'll write over here purchased. You have purchased a new plant. Okay, you have purchased a new plant which is 76,000. So that has been considered. Okay, you have considered a purchase of 76,000. So this, now one more important thing that you have to remember is you have deduced or you have investigated and you found out that your business has purchased plant worth 76,000. This was not previously known to us. We just came to know this as of now. So this amount we have got by deduction, or we have deduced with the preparation of the ledger account, and the balancing figure is 76,000. And the balancing figure is 76,000. Now, the purchase of plant, this is the application. Okay, the purchase on plant, this is an application. This has to be considered in step 3. Okay, so this we will have to consider in step 3. Now let's move on to the next account. The next account that we have to prepare is the land and building account. The next that we have to prepare is land and building account. Land and building account this is also real in nature. This is also real in nature. So to balance brought down, which is to balance brought down, which is 4 lakh. Next is then by balance carried down 3,80,000. Now, what else? What do we have to consider? What has been communicated as to us is that a piece of land has been sold. What has been told to us is that during this year, you have sold a piece of land. They've not told us how much of land has been sold. That has not been told to us. We have to calculate, or we have to assume. So, whenever you carry out a sale, it will feature on which side, debit side or credit side. Remember, land and building is real. Debit what comes in, credit what goes up. What would be going out? Land and building would be going up. So there's something which will be happening over here. So now let's just quickly calculate. 4 lakhs is what will show up over here. What will show up over here, which means the balancing figure will feature on the credit side. Now, how much is the balancing figure? Balancing figure is 20,000. Okay, the balancing figure is 20,000. So let's calculate. By cash account, because you're carrying out a sale. So this is your balancing figure. And just for you to know, I'm going to mention this to be a sale. Now you have carried out a sale of land and building worth 20,000. You have carried out a sale of land and building worth 20,000. Okay, so this is also completed, and now let us move. And now let us proceed. And let us continue. Now, one important aspect you have to remember is the sale of 20,000. This you have to consider as an application. Okay? This you will have to consider as an application. So this will be an application, and this will be featuring step 3. This will be featuring step 3. Next, what is it that we have to prepare for? We will have to prepare for income provision income tax. Provision for income tax. Provision for income tax. Now, provision for income tax. Remember, what type of account is it? It is a nominal account. So, debit all expenses, credit all incomes and gains. Since it's a liability, here the opening balance will feature on which side? It will be featuring on the credit side. So, by balance brought down, and how much is the balance that you're bringing down over here? Here it is 60,000. Okay, balance it is 60,000. Okay. Then what else have you done? Okay. What else have you done? You have brought in, you have added some money. Okay. You have before that, we also have to add the closing balance. So to balance, carry down, how much is the closing balance? Closing balance is 70,000. Closing balance is 70,000. Closing balance is 70,000. So that also you have considered. So opening balance is 60,000. Closing balance is 70,000. Now what do we have to account for? We will have to account for. The additional amount of money that you have added. So how much have you added? You have added 50,000. You have added 50,000. So how much would that be? That is 50,000. Which side will that fall? That will fall on the credit side. Why is it on credit side? Because please remember, debit all expenses and losses, credit all incomes and gains. So since you're adding here, it will be a gain. So here it will be by adjusted profit and loss account. Adjusted profit and loss account, and here it is 50,000. Adjusted profit and loss account, and it is 50,000. So here it has to be 1,10,000. Since here it is 1,10,000, here also it should be 1,10,000. Here also it should be 1,10,000. Now, which means the balancing figure, we will have a balancing figure of 40,000. So how much? Now, when will you have the balancing figure falling on the debit side of provision for income tax? You will have the balancing figure for 40,000 featuring on the debit side when it is a expense. Okay? When it is an expense, please remember nominal account, debit all expenses. So when it is an expense, that is when it will be featuring here. So here it will be to tax paid. Okay, to tax paid, this will be your balancing figure. To tax paid, this will be your balancing figure. This will be 40,000. Now, a couple of important aspects that you have to remember over here is payment of tax. Okay, this will be an application fee. Payment of tax, this will be an application for you. This has to be considered in step 3. Adjusted profit and loss account, you're adding 50,000. This would be an appropriation for you in step 2. So this is how you would go about with the preparation of the ledger accounts. The next step is we will have to prepare the adjusted profit and loss account. We have prepared schedule showing changes in working capital. We prepared ledgers. Now we are preparing the adjusted profit and loss account. While preparing the adjusted profit and loss account, please remember we are working with the net profit method. So we will have to start off with the opening balance. Your opening balance was your the first year's. It would be the first year's net profit. It would be the first year's net profit. First year's net profit is how much? First year's net profit is 61,000. Okay. First year's net profit is 61,000. The first year's net profit is 61,000. So that's your opening balance. Okay. That is your opening balance. Now, what are the other items that we must consider? Now, the items that we have to consider here, let's look at the balance sheet. Balance sheet, let's look at the liability side first. The share capital in 2015, it was 4 lakh. In 2016, it is 5 lakh. So why now? What has happened with the share capital? Share capital has increased. When the share capital increased, share capital would be increasing when you have carried out an issue. So here you have carried out an issue of share capital. This increase of 1 lakh, you will be accommodating it as a source. This increase by 1 lakh, you will be accommodating it as source. Next one, look. So this will go into step 3. This will be going into step 3. Step general reserve, here it is 1 lakh, next is 1,20,000. So what has happened here? General reserve has increased by 24. There is an appropriation. There is an appropriation. This you'll be treating in step 2. Profit and loss account, notice here there is a change. So profit and loss account is nothing but your net profit. The other 3 items we have considered. So provision for taxation, we've been already told that there's an addition. So this is also, you will have to treat it as an appropriation. Let's look at land and building. Land and building also, for this we have prepared ledger account. We've investigated the change. Plant, for this also we prepared the ledger account. We've investigated it. So the rest all is good. So now let's go back to the preparation of the adjusted profit and loss account. So here at first we have to consider the non-operating expenses. We have to consider the non-operating expenses. Now, what are the non-operating expenses that we have? We do not have any non-operating expenses. Here we do not have any non-operating expenses. So next what we can do is we can move on with the appropriations. We can move on with the appropriations. Now next what we have is the appropriations. So let's just quickly look at the appropriations that we have. So what are the appropriations that we have? Okay, so to general reserve, okay, you have transferred some money to general reserve. How much have you transferred to general reserve? You have transferred 20,000. You have transferred a sum of 20,000 here. Next, what we have? We have to provision for taxation. To provision for taxation. And provision for taxation, there is a change, and the change is by 50,000. There is a change, and that is changes by 50,000. That has also been considered. Okay. So we have considered these 2 appropriations, and right with the consideration of these 2 appropriations, we have more or less completed. Now there were 2. Actually, I made a small mistake when I had mentioned that there are no non-operating expenses. There were 2 items that I actually missed out. One was depreciation. So we have to depreciation on plant. The depreciation on plant is 28,000. We have a depreciation on plant of 20,000. Then we also have dividend. So there's an interim dividend that has been paid. That also we have to consider, and for which we have to treat it as a non-operating. So 2 interim dividend. Okay, so that we have to pay. Interim dividend we have to pay. And how much is interim dividend? Interim dividend is 40,000. Interim dividend is 40,000. That has also been considered. Now, anything else that we have to look out for? We have to bring in the closing balance. So how much is the closing balance? To net profit carried down. So here, I'll just correct this for your understanding, for your better understanding. To net profit brought down. So here the amount is 61,200. Now, from the looks of it, let's see which side is more. Let us see which side is more. It appears to be that debit side is more. Okay, it appears to be that debit side is more. So let's just quickly take up the total, and the total here should be 1,99,200. 1,99,000, which means credit side should also be 1,99,200. So here also it should be 1,99,200. So where will the balancing figure fall? Balancing figure will fall on the credit side. So if the balancing figure were to fall on the credit side, what would that be? So that would be by funds from operation. By funds from operation, this is your balancing figure, and that has been completed. Now let's see how much is, let's just quickly calculate and see how much is the balancing figure. Balancing figure would be the difference between these two. Okay, the balancing figure would be the difference between these two, which is 1,38,200. It is 1,38,200. So this we will have to carry to step 3. Okay, so this we will have to consider to step 3. So with that, we have completed the preparation of the adjusted profit and loss. The next statement that we will have to prepare is the statement of sources and application of funds. Okay, the next and the final statement that we have to prepare is the statement of sources and application of funds. Now let's quickly look at the question and let's try and identify which are our sources, which are our applications. So funds from operation, it is a source. Okay, funds from operation, it is a source, which is 1,38,200. 1,38,200. This is a source. Then we know there was an increase in working capital. There was an increase in working capital. This is an application. So this is an application. So 1,02,200. 1,02,200. That application is it is a 1,02,000 increase in working capital. That is a next. What we have is that we will have to go about with considering the other items. Okay, so just to let you know, here buy and to is actually not mandatory because it is just a statement. It is not a ledger account. It is not an accounts. So just put that correction. Okay, next we have to look at the ledgers and see what are the possible things. There was a purchase of plant. So there was a purchase of plant. A purchase of plant. There was an amount of 76,000 that has been considered. Okay, then next what we have tax paid. Okay, we have tax paid, and tax paid is 40,000. The tax paid is 40,000 that has been considered. Then what else do we have? There was an interim dividend paid. So interim dividend paid, that is also an application. So that is 40,000. Now let's just quickly go back to the sources. What were the sources that we have? So issue of share capital. The issue of share capital. You have issued new capital worth 1 lakh. That has been considered. Then another source that you have is sale of land. You have made out a sale of land which is worth 20,000. So that has also been considered. So I think that's pretty much it. Let me just try and total up the sources with the applications and see how does it work. So that has balance, which means our fund flow statement is absolutely correct, and this is fine. So it has balance, our sources are matching with our applications, and we have completed with the preparation of the